I'd love to welcome the CTO of Lyft, Chris Lambert. Chris?
Thanks for having me.
All right. So is it true that you sometimes ride a electric skateboard in traffic here in San Francisco?
Yes, that's true.
Okay. All right.
When I'm not in a lift.
Okay.
Yeah.
It's a bit more eco-friendly then.
It's a little greener, yeah.
Okay, cool. So you worked at Google in engineering for many years,
Yep.
Including on maps, before joining Lyft about 4 years ago, is that right?
Correct.
Okay. And then you ran all of engineering until you found somebody to do that day to day, maybe a couple of years ago?
About a year and a half ago.
Year and a half ago. Okay, cool. So you have about 300 or so engineers and data scientists, something in that?
Yep, we're about
ballpark?
maybe 80 or 90% San Francisco and the rest in Seattle.
Rest in Seattle. Okay, cool. So that's about maybe a tenth the size of the Uber Eng org for anyone who's counting. So I'm curious. Companies are valuable because of their people, but I'd love to know what the kind of core IP of Lyft is. What's sort of the lasting value that you've built through in your technology, whether it's matching algorithms or other things. Can you sort of take us through kind of the top 5 things that you would consider your core IP at this point?
Sure. So from a technology perspective, there are a number of areas that we've invested heavily in, and the big 3 I would say are our marketplace and mapping teams, which are a lot of the things that you were just alluding to around dispatching and lift line matching and travel time prediction, dynamic pricing, and we can talk a little bit more about that. Another big area is our growth team and our growth org, and that's just doing everything we can to help our passengers and drivers be more engaged and get on the platform faster. And then the third area is our infrastructure team, and this is a pretty big area for us, but our infrastructure group basically enables the rest of the company and the rest of the engineering team in particular to build faster, more reliable systems quicker. So there's a lot of work that they do to basically make it so the infrastructure gets out of the way and allows our individual product teams to move as fast as possible.
Okay. And if you were to pick one thing that's the most important of all those things that you built, which would it be?
Yeah, I think it's really tough to just pick one. Every team has a roadmap that's basically centered around working on the most important things in that area. So on the infrastructure side, one of the things that we're most proud of is a project we open sourced about a month ago called Envoy that makes microservice development at scale much more maintainable. It basically is responsible for all service-to-service communication. So at Lyft, we have about 300 engineers. We have about 150 different microservices. And that's a 2-to-1 ratio, which is pretty intimidating if you don't have really good foundation to build on. So Envoy actually is responsible for all inter-service communication, which allows us to keep track on what services are healthy, what's a success rate, what's the latency, to know if something is failing, why is it failing, to which consumers, and it's provided a level of visibility into our infrastructure that makes it much easier to move quickly, which means a service owner can release 10 times a day and have confidence that the service is working as they'd expect. So that's on the infrastructure side. On the growth side, there's a lot that we've done in terms of user acquisition to make that much more efficient and scale more economically, which we're really proud of. We haven't talked too much about that publicly because not a ton of value to sharing that stuff. But on the marketplace
Feel free.
side,
We have plenty of time.
Great place to do it. On the marketplace side, I think this is an area we've invested heavily in for the last 3.5 years, and we probably have 60 different versions of our dynamic pricing system that have worked to basically make sure that drivers are earning as much as possible while still charging passengers the least amount we can to balance that marketplace in real time. Our lift line system is all about maximizing the match efficiency of the rides that we do put people in. So it takes into account everything from what's the likelihood of a user to cancel for a certain route, and how do we minimize that by putting them in the best possible configuration in terms of pickup and drop-off ordering. And there's a ton of complexity that goes into that. But we've been working on that for longer than almost anyone else in the industry.
Okay. So we just wrote about so we talked about dynamic pricing and or surge pricing, which is the way Uber refers to it. We just wrote about a person who re-architected the surge pricing algorithm at Uber starting a couple of years ago. Turns out it was a total nightmare until he got there and kind of made it 3 times more efficient, which I guess saves all you guys money. When it comes to what you've built, is it easy for you to compare it to your competition? Do you know in any of these areas whether what you have is better, more efficient, whatever you want to call it, than Uber?
Yeah, what we focus on is basically our teams have a few different metrics that they optimize around for our own performance. So, for example, we have a travel time estimation system, and this is something that we have years of training data. So basically, every Lyft ride that's ever happened on the system and all the speeds of the roads that were observed along that ride is fed into a model that then informs future travel time predictions on Lyft. And this is actually blended with real-time traffic. So every ride that's happening for Lyft today is informing the travel time estimates we make for the rides that are going to happen in the next 15 minutes. So there are a few different, in this one example, there are a few different metrics that we evaluate that system performance on. And the team is basically pushing new models every week. And when they test them, if they do better than the previous models that we're shipping, we'll launch those. So there's not a lot of value for us in saying, is this better or worse than Uber? It's really, are we making progress on our own models, and are we making them the best they can be? So
but you do still pay attention and compare whenever you can, right?
I mean, I guess the question is like, what is the actionable information you get out of that versus just focusing on your own models and saying, hey, like we worked, for the last 4 weeks on this model, we tested it, it's 10% better, like let's get it out there as soon as possible. So really, when you think about an engineering team and a data science team and their day-to-day work and the things that they're doing, there's not really a lot of value in comparing to the competition.
Okay, it sounds like there's been a ton at both companies, kind of obsessions over comparing some of these things and look at especially wait times, which is one that's maybe a little bit easier to check. But so you report to the CEO, Logan Green, right?
Yep.
Do you still play hockey together, or not as much anymore?
Logan had twins about 1.5 years ago, and that cut into his hockey playing time.
Okay.
And I'm expecting his son actually any day now, so that
okay.
I may be cut off as well.
Yeah,
but
forget
we'll
about
see.
it.
Yep.
No hockey. And it's a very dangerous sport. So you now focus on technology strategy, engineering strategy, and that also means that you interface with a lot of your tech partners, whether it's Amazon for cloud infrastructure, Google for maps, and GM and Cruise for autonomous vehicles. Is that a fair way to describe it? Okay. And this is a good time to note that from here on out, when I say AV, I'm talking about autonomous vehicles, not audio video, although I have nothing against audio video, but just to make it easier. So this is a good time to talk about outsourcing. You have these kind of 3 core areas that I pointed out where you have partners that fulfill a lot of the back end. Is that a matter of choice, or is that a matter of lack of resources?
Yeah, it's definitely deliberate choice. I mean, there's no question that our engineering team is smaller than Uber's, but really we look at what are the problems that we're solving and what do we gain by doing that in-house versus letting someone else handle that. So we've been on AWS since the very first day, and that's afforded us the ability to basically use certain AWS services when they're not competitive differentiators in and of themselves, and allows us to move faster and move quicker and focus on the areas that are important. So, take for example travel time estimates. That's something that's so core to our business, and it's used in dispatching, it's used in dynamic pricing, it's used in Lyft line matching. It's just used in pretty much every layer of our system. And sure, there are APIs you can go and license that technology from here or from Google. But we've actually decided that's an area that we want to go deep on, and we built pretty extensive systems to make that possible. So really, it comes down to like what is the area of investment that you're talking about, and what is the quality delta that you'll get from doing it yourself versus relying on a third party, and that really helps inform kind of the path we take with this stuff.
So I think Uber's argument would be that, you know, it has invested in all these three areas. It's hired people who are domain experts and paid a lot of money for those people, and that allows them to control their own destiny. But if I flip that, you don't feel like it puts any major limitations on your business?
No, I mean, I think we've been pretty happy with the trade-offs we've made in this area. You know, one example would be, from the start, you know, we knew it would be challenging for a U.S. company to go invest in China and win in China. I was at Google for a few years, and I saw that battle play out. So that's an area where, you know, as big of a market as that is, we decided not to go invest there and to partner with Didi.
Okay. So how well do you know the Cruise folks here? You got to know them pretty well?
Yeah.
Do you, how do you know if they're any good?
I mean, there's the track record, there's the people they brought in, and then there's the progress they've made with the cars on the road. So they haven't spoken too much publicly, and I don't want to speak for them, but it's pretty phenomenal what they've been able to accomplish.
Okay, because when I've talked to people in the AV space who kind of saw their stuff before the acquisition, post-acquisition, when they learned the news, they were a bit flabbergasted by it. But you're so far impressed with what you.
Yeah, I mean, I don't want to speak for them, but I think their rate of innovation is phenomenal.
Okay, so how long did Lyft have its own AV software team? I think maybe it was last year, or something like that.
Yeah, so we've not invested on the AV software side.
But you had, for like a little bit of time, you had a few people kind of working on it, right?
I mean, we have, you know, we don't have, Google has 20% time. We don't have an equivalent thing, but there are definitely people who are interested in it who are kind of working on it.
But after the whole Cruise thing, it was sort of like, well, we'll go with that.
No, I mean, it's never been an effort that we've staffed up.
Okay. So now you're working on kind of what aspects of AVs, what are you planning for right now? How are you thinking about your future in that space?
Yeah, we see Lyft's role in this space is that of the network, and our view is that as these vehicles are introduced, there are going to be certain restrictions. They can only go on, you know, certain roads at certain speeds with certain grades and certain weather conditions. There's a long list of things that AV manufacturers feel are going to be kind of gradually eligible through deployment, so that it's not going to be that you have a car on day one that can drive all scenarios and all intersections. It's really going to be, okay, we've certified that this car can do these types of scenarios, let's get it on the road. And what that means is some of your rides will be able to be fulfilled with autonomous vehicles, and some of them you'll need human drivers. So through that transition period, which might be 5 years, 10 years, 15 years, we think it's really important to have a human network to blend those vehicles into. If you take an autonomous vehicle to work and then it's you know, a crazy snowstorm on the way home, you still want to be able to get home. So you could have a human driver play a big part of that.
And Jay-Z, your president, was actually saying that there are going to be more drivers for a while because the demand in general is going to keep going up.
Yeah, I mean, one of the things that will start to happen as the shift to autonomous vehicles plays out is the economics of transportation as a service in terms of like the cost per mile of what it actually costs you to get from A to B will start dropping. From where it is today, which is, you know, might be $2 a mile all in, to levels that, you know, make it much more competitive with car ownership. And when that happens, you're going to start seeing.
Which is what? What's the like threshold?
I mean, it varies given the modeling, but you could imagine, you know, 25, 50 cents a mile. And I think what that does is it starts to make it much more attractive for people to give up their cars, especially in urban centers. And when that happens, they go from taking, you know, 2, 3, or 4 Lyfts a week to 20, 30, or 40 Lyfts a week. And what that means is there's going to be this shift that as autonomous vehicles are introduced, there's actually a corresponding spike in demand that's at a scale even beyond the volume of autonomous vehicles that are hitting the road, just given the economic dynamics that play out.
So does that mean that you are you going to buy cars from GM yourself, or are they going to still own them? How's that going to work?
So our view on this is that, as a network operator, we're going to be responsible for, fleet positioning, fleet maintenance, fleet operations. As
But
far
not
as
owning.
who owns the vehicles, I think that's a financing question, still to be determined.
So it's possible that you'll make kind of fleet acquisitions.
Yeah, I
directly
think anything's on the table.
Okay. So you then need a lot of people to clean them and deal with them, and that's a whole other.
Yeah, I mean, one of the things that came out of the GM partnership, so for those that don't know, General Motors invested $500 million in Lyft in January this year. And as part of that, there were a few things that we were excited about working on together. One is this autonomous network that we've been talking about, and getting that to consumers as quickly as possible. And the other is our Express Drive program, which has been, I think a lot of people aren't familiar with this because it's really on the driver side of the marketplace. But we basically allow drivers to drive on the Lyft platform with a free car. So if you sign up for Express Drive, you can go and get General Motors vehicle, and we've actually already paid out, I think, over $500 million to drivers through the Express Drive program. So this is something that we've been able to ramp up really quickly, and has been a pretty big success story. But as part of that, there's a natural tendency where, okay, you do have these cars and these fleets, and you have to have a little bit of a core competency in operating and maintaining those vehicles.
And how many regular or human-driven cars will one AV replace? Do you know? Do you have a number? 10?
Sorry, the question was how many?
How many human-driven cars will one autonomous vehicle replace?
I think, I mean, depending on utilization, it could be.
10's a good number?
I guess, are you thinking in terms of vehicles on the Lyft network or vehicles owned by consumers?
Vehicles on, and eventually vehicles on the network, yeah.
Yeah, I think it depends on utilization. So if you're just looking at Lyft vehicles on the network, it's likely that an autonomous vehicle could do 2 or 3 times the trip volume of a full-time driver.
Got it. Okay. And you've said the majority of rides will be autonomous within 5 years. How can you be so sure?
I mean, just given the pace of innovation in the industry and what our partners are forecasts look like.
And have you considered that Google or maybe another company would kind of get to full autonomy first before GM, and they start a local ride-sharing network even here in San Francisco? Have you thought about that?
I mean, we definitely have a bunch of different models that we consider, but nothing in particular to talk about.
Okay. But it's possible?
Yeah, it's possible.
Okay. And obviously some of the OEMs that are making this stuff, like Ford, they want to own these mobility services themselves. So in terms of the companies that are developing autonomous vehicles, obviously you're bound to the GM relationship and the partnership, but which other companies do you take seriously in the space?
I mean, I think that right now we're focused on executing our partnership with GM and Cruise as best as we can. I think there's Google's obviously made tremendous progress, and the usual suspects I think of people that have been out there. Such as I mean Tesla's announcement yesterday, and I think a lot of the.
So you take Tesla really seriously?
I mean, I think they've made a bold bet, and their approach is
contrarian.
A little bit, but it's Elon Musk, so we.
So is he crazy smart or is he crazy?
Well, I mean, so there's one area where we don't see eye to eye is in terms of how these fleets will be rolled out. It's actually something that a lot of people we've talked to, General Motors in particular, saw our vision from day one and really bought into it. And I think that's super exciting that they're on the same page in terms of autonomous vehicles being introduced into a fleet, making the most sense from an efficiency and an economics perspective. I think Tesla's approach is to basically have personal owners kind of opt in to sharing their car in a fleet model for other people to use.
Yeah, I'm not sure about that.
And I think when you play that out, your car basically has to be eligible for anyone else to take and use, and I just think that it's going to be a challenging sell to get Tesla owners to buy into that.
Last 2 quick things. I've just been doing a lot of research on growth strategies for ride-sharing companies. Seems like there's a lot of learnings going on, a lot of money that's been wasted needlessly by all companies. including Uber in a really big way. And I know Lyft has learned a lot. You guys used to give a coupon to every rider as soon as they downloaded the app, even though they were going to take a ride, and you stopped doing that, and that saved tens of millions of dollars. Do you feel like there's still a lot more of those kind of tens of millions of dollars a year learnings that you're going to optimize for and get more efficient?
No, I mean, the way I look at it is we've been able to grow a new industry and a new behavior incredibly fast. A few years ago, the idea of on-demand transportation with personal vehicles was unheard of. And people said that that will never succeed, that will never take off. And the amount of traction we've been able to see in just the last 4 years is phenomenal. And the second example of that is Lyft Line, where we created a shared ride service that never existed before. And I think a lot of people, you take it for granted now, but that was a new behavior, and getting people comfortable with sharing rides in real time, on demand, in urban centers, has actually made carpooling attractive. And that's a huge amount of behavior change that I think people expected would take 5, 10, maybe 15 years to actually make a reality, and now it's the majority of our rides in some of our biggest markets. So I, definitely growing that quickly and sustaining that growth, it's a capital intensive business, but I wouldn't view it as waste at all.
Okay. Last tiny question. Do you think in a year or two you'll be part of GM or independent and on a path toward IPO? What's more likely?
Yeah, so I've been with Lyft for 4 years. Before I joined, Logan and John have been on this journey to make transportation more efficient and more affordable for the last 7 or 8 years. And they're going to do everything they can to make sure that we're able to execute on that mission long term. And that's not looking for an exit, that's building a sustainable company that's going to be around for years to come. So that's our focus. Okay,
cool. Do we have time for any questions, or have I gone over? I don't know. Amy? No? Okay, sorry. No questions. Thank you, Chris, very much.
All right. Great to be here.
Yeah.